Hi everyone, it's Melissa with Atlas CFO, bringing you your monthly mission for the month of November, and we're talking about the cash flow management in winter. Now, winter is many times a tough month for us because we've got less work and a lot of other things going on. And so first I'm going to tell you a story of me putting on lipstick just to kiss a check. Yeah, not every day I wear lipstick, but whenever I had a special check that came in just in the nick of time to cover payroll, I would put on some bright lipstick and kiss the check before it went to the bank. That is the kind of love affair that you end up with money coming in whenever you're short on cash. And maybe you haven't ever put on lipstick because that's not your thing, but you probably understand what I'm saying. So why is it so tough for us in winter? Well, we can even have profit and still be short on cash flow. And there's several reasons why this is happening. One of the things that happens to us is we start doing some tax planning at year end, and we may have to spend cash to get the tax goals met. Now that's a slippery slope because we may actually want to keep the cash even though it may cost us a little bit in taxable income and that tax bill in April, but we have to manage both of those items. Sometimes in these winter months, we will have losses on our books instead of net income just because we're doing less work. That tricky retention, sometimes we still haven't collected it from all of our summer work, and so we'll get that last bit of retention that we really need to collect still hanging out there in the winter months. And there's less work. Depending on where you are, you may have some weather problems, delays, just things you just can't do. Many times the end of the year is also time for our parties and year-end bonuses, so we also are using our cash at this period of time. And sometimes we have the wrong debt mix. And when we have the wrong debt mix, that can put a strain on our cash flow that maybe we wouldn't normally need. So your mission this month is first and foremost, we need to do the financial projection for the end of the year. There's two things that we really want to focus on, and one is cash flow. So we want to look at the cash flows, big picture, in the next 6 months so that we can plan how much cash we need to retain to make sure we get through these winter months. And the second thing is to look at our taxable income. Now, last month we talked about taxes and preparing and meeting with our tax accountant. So you can see this all flows together. So we're meeting and we're discussing our tax situation, but at the same time, we want to keep in mind that we have cash flow needs coming in these future months that we don't want to, rob Peter to pay Paul, if you will, to get through these months. Okay, time for your assignment. So your assignment for this month is to first make sure you get through your projections. If you're using Shane's model, it's probably already scheduled or you've done it already. If you're not using Shane's model, then you want to do something to do planning for taxable income and cash flow. If the growth model is something that you aren't doing and you're interested in, just holler at us. And then pick one item from this list of to-dos, and it is also in the description section of our Kajabi. And hey, I might just make you a checklist because I love checklists, and that just makes it a little bit easier. So you can pick one item and do that one item. So you're going to do your projection if you haven't already, get a plan for how that cash flow and taxable income is going to flow, and then pick one item from this list to help keep that cash flow flowing in these winter months. It's great to talk to you. I hope you have a great day, and I'll talk to you soon.